Yo, yo. So, what we're going to do today is we're going to focus on the easiest way to identify trend direction, okay? So, for us to be able to get into trend direction, we need to really think about what is trend. What does trend mean? What does it mean to have a trend? So if you think outside of trading, what is a trend? What is it when something is trending? Think about maybe on Twitter or something like that. When you look at the trending tab, what does it mean? It means things that are gaining in popularity, yet at the same time you can get something which is losing popularity and therefore a downward trend. Okay, so to identify trend or trend direction, you've got to think about what is really kind of gaining in popularity, what is dropping in popularity, but how do you determine that? Okay, and why is it important? So first of all, I've just got this little white box which has a few things written behind it, which is going to be helpful. From my own results, trading with the trend only, it will increase your win rate by about 80%. The reason for that is if you're going against the trend, at any point there could be a big shift in the market just pushing everything against you, okay? Everything can go in the opposite direction. When you're going counter trend, just so you're aware, the market tends to rebalance and mitigate a lot. So it's sort of like clearing house, it's clearing everything on its way down. There's multiple opportunities to get into the market. There's loads of false kind of signals when using order blocks. When you're going counter trend, when you're going pro trend, there's lots of imbalances left behind. Okay, so there's like one little gem hopefully that you can take away from this, in addition to how to identify the trend. Now, identifying the trend isn't actually that difficult, but I do see with a lot of sort of newcomers to FTR, link in the description by the way, is they tend to have the same kind of query when looking at the charts. They're not sure whereabouts to identify using BOS and CHoCH. So identifying trend direction, what do you think in terms of basics with trading? What do you tend to use? Tend to use highs, tend to use lows, and how do they translate into modern day trading speak? BOS, which is break of structure, and CHoCH, which is a change of direction or change of character. Okay, and I'm going to show you in a second a little bit on here, and then we're going to jump into some charts, and then we're going to just go from there, okay? So first of all, what do we need to do? We need to look for the most recently printed high or low, okay? So first of all, I'm just gonna do it on here, then we're gonna jump into the charts, and I'm just gonna show you on there, okay? So look for the most recently printed high or low. We're gonna have a starting point down at the bottom. I do this on most of my videos. Starting point down at the bottom, end point. Doesn't matter what time frame it is, let's pretend it's the daily. All right, so one line is a daily candle, okay? Starting point down here, end point up here. Therefore, we need to identify the most recent high. The most recent high at this moment in time is here, okay? Let me just change that color, make it a little bit more visible, okay? So there's the high. Now, if the next day comes along, okay, so day number 2 is about to be printed. If it continues up, what happens? Do we get a break of this structure? So do we get a break of it, or do we just get a continuation of it? Think about it. Think about it just for a second. We just get a continuation because nothing's had to be broken, okay? So day 2 comes in, we finish up there. What happens with day 3 if we end up not printing a new high, so we don't continue going higher? What happens if it closes, say for example down there? So day 1 there, day 2 here, day 3 here. This is the close. That was the open, that was the close. What's happened? We haven't printed a new high, yet at the same time we haven't printed a new low, which we should also have on the charts, okay? So we've definitely got a low marked down here, okay? So for us to be able to identify the trend direction, what did we have? We had a low point or a starting point. We have a high point, which was the end point of that leg, okay? So you're gonna hear the phrases of, legs and bits and pieces like that. And if we're looking and using, our Fibonacci retracement tool in the way which we use it, we've now entered into something called the equilibrium, or we've gone past all the premium zone. We're now into discount where it's cheaper, which is good. So if we're gonna go in the same direction of the trend, we want to be getting involved down here. Now, why is it that I say that we want to be getting involved in all of the discount zones if we can? All right, it's because the trend direction continues about 66% of the time. Okay, 66 to 70, depending on which time frame, which pair you're looking at. All right, so we're expecting, with a positive expectancy, that price is at some point going to continue going in the direction which it was. All right, so we're expecting that, say, I don't know, day 4, day 5, day 6, whatever, we are going to get a break of this highest point, okay? So this was the highest point prior to price coming back down on itself on this current leg. All right, so we move up, that's the end of day 4. All right, so end of day 4, what happens with this? Well, just for visual viewpoints and for us to be able to stick with the terminology which gets used in trading a lot, we're now going to label this BOS, okay? So BOS, it just stands for break of structure, okay? Why? Because the structure prior to this, all right, I'm just gonna squeeze this down. The structure prior to this was price was going up, then it pulled down, and then we get that break of structure. What happens to this, by the way? So what happens to this lowest point? Well, this is still relevant to an extent, but without going into it too much on this video, it just becomes old demand coming into the market, all right? It's got about a 50% chance of reacting. Price can either shoot through it or bounce off it, probably won't reverse though. So what are we left with now? So if we look at this structure, what has happened now is we've got that starting point kind of over here for the break of structure, and then we've got the end point for the break of structure. For us to determine our reversal point or potential reversal point, i.e. our CHoCH zone, okay, so CHoCH is change of character or change of direction. Normally determined with a body break, not always with a body break, but what that means is that price would need to come back down again, so it would need to not print new highs in this example, it would need to come back down, not react from an order block or a zone or something which we can identify on here, but instead pass through the lowest point between the break of structure start and break of structure finish, okay? So we draw on our charts with anticipation our CHoCH line, all right? So we draw on our CHoCH line before it's reached CHoCH, all right? It just makes it easier for us to be able to identify where there's potential for a trend reversal, all right? So if we have price happen like this, what do we have? We have CHoCH in the market. Let's do it like that. We have CHoCH, and then what is the leg that we're now going to refer to? So when we think about the first leg, which we were looking at, it was this one. Where's the second leg, by the way? Okay, just have a quick look. Determine where's the second leg, which we're going to be trying to trade. The second leg was in fact this one. And now that we've had CHoCH, okay, a change of direction, a change of character in the market where we're looking at going the other direction, where's the third leg? It is printed on the chart. The third leg is now this one. Why is it that one? It's because we've changed direction, okay? Once we've done this, this becomes obsolete and old, you know, you typically delete it from your chart because you're not paying attention to it anymore. With this one, unless it's a higher time frame leg to the time frame which we're looking at, we can also delete that one. You can keep this on the chart if you want, you know, you can keep that on the chart, but just understand it may well just be a reaction point now. It's old orders, orders removed, etc. Can pretty much get rid of it. But keep it on just because you will start seeing these as reaction points. But our new leg is this. So for us to now get a break of structure, okay, so we looked at a break of structure going north, we're now going to look at a break of structure to go in south. What needs to happen? Well, we need to wait until a new low stops getting printed. Let's say day 6 comes down and it prints that. Day 6 has come in. What happens to this leg? Well, this leg now extends, okay? So it's now gone down to here. So we can figure out where our premium, discount, equilibrium, and extreme are, okay? For trade entries. And we now are just looking for the next candle to not print a new low, okay? And we want to close back in within this new leg, this new range that we've created. And that new range, by the way, is this, all right? So this is our CHoCH line written in anticipation. And this is our trend continuation, i.e. BOS line, all right? So put this all in anticipation. It's all helpful. I use alerts on the line, so if price passes through, I know what's going on. I should look at my phone and re-update it. We get day 7 come along, and what happens? We finally close back in within that range. So what does it make this? Okay, may have just mentioned it. Makes this our boss line. Makes this our CHoCH line. And we're looking for shorts because we want to go in the direction of the trend. Now, as I mentioned before, your win rate should increase by about 80%, and that is because of the order flow in the market, okay? You'll know when you're going in the wrong direction quite instinctively because you're going to be stuck around about break even or slightly getting into profit a lot slower than if you're going in the correct direction of the trend, okay? That's usually a telltale sign. Not always the way, but quite often it is the way. There's also a lot of rebalancing and mitigations of order blocks when you're going counter trend. All right. When you're going pro trend, you get less entry opportunities because there's so much imbalance between the candles, but you know you're going in the right direction. So if you can get involved on a pullback in the direction of the trend, not only are you going to hit your target a lot faster and take profit a lot faster, you're going to be taking profit a lot more often because we know that the price continues in the trend direction between 66 and 81, 82% of the time. Again, depending which currency you're looking at. So this is the step-by-step, which I probably should have gone through before. So you look for the most recently printed high or low. So that was the high, that was the low. Then you work backwards. All right, so we're going to do that when we look on the charts in a second. Then you find a space between the candles, i.e. this. Yeah, so you have the pullback happen. There's now a gap between the candles, but when we're working backwards, we'll be able to do it a little bit clearer. Determine boss. There we go, we figured that out. Determine CHoCH. We figured this one out. And then you just rinse and repeat. So you always want to be taking trades in the direction of boss, not really with CHoCH, okay? So let's jump onto the actual charts themselves. Here we go. Ooh, haven't used these colors for a while, but let's just get going, okay? I'm gonna do the daily chart and just draw out a few, okay? And in the next video, hopefully, I should have a task video for you. Not just a task, but recording data extrapolation. So you can trade this with confidence for yourself, okay? And you will see a difference in your trading, all right? So let's just start off, I don't know, anywhere. Doesn't matter, it doesn't have to be bar replay. You know what, let's just do bar replay. Just for the sake of it, because it might be helpful for some people. All right, so let's start off here and say, right, where is our breaker structure? Where's our boss? Where's our CHoCH? Now, this is all what I would do. You can start off at the most recent highest point, all right? So there's our high currently. Where's our low? Here. How did I determine that? Well, first of all, I had to look backwards a little bit on the charts to make sure that I've got everything in the correct place. It can be really sort of like visible right at the start, but unless you've got the overall market structure correct, these ones can be inaccurate. So for me to be able to get this low, which would be the CHoCH line, I had to look left, okay? So I had to look left on the chart, I had to look over here. What had happened here? We got a breaker structure, okay? So there's daily boss there. So daily boss happens there. Therefore, we go to the lowest point, that's daily CHoCH. And then we got daily boss again. Now, we look backwards and we think, okay, where was the previous breaker structure? Let's go to something really obvious. Let's go over here. All right. So there's a daily boss. Price is coming down. We had a slight pullback. Okay. See, there's space between here, and then we finally broke it. All right. So there's our boss. Therefore, our CHoCH line here is there. Our CHoCH line is there. So price came down, printed another low with this candle, price came up, and we got CHoCH, all right? So our CHoCH line at this point was here. Now it's old CHoCH because we got new CHoCH. Okay, price went up, we got a break with a wick, still a break, and then we just press on, okay? So this line can now essentially just move up. We've now got a pullback. Why is this a pullback? It's because we haven't printed a new high, okay? The last one was up, the last one before that was up, and this one is down, okay? And before long, when you start testing this and doing it on a regular basis, you can start to identify candlestick patterns where you just instinctively know what color the next candle is going to be, okay? Kind of said that too soon, but yeah, we got CHoCH there, which is great. So we've got CHoCH. If it breaks down again, so it keeps on coming down, then we get a pullback, now break down again, what's that going to be? Okay, it's going to be BOS. It's going to be break of structure. Just remember, they flip, okay? They flip depending which direction you're going on. Okay, so let's get our new line on the chart. This is our new BOS line. What does that make this? Make sure it's CHoCH. We've got a pullback. And we got BOS. Okay, so where's our next line going to go in? There. What happens to our CHoCH line? Well, this becomes old news. That's old CHoCH. Still important in terms of, you know, overall market structure. But our new area to actually break is here, because look between the BOS line and the BOS break. Go to the highest point. It is this bit. That's the CHoCH line to break before we determine a new direction on the trend. Okay, let's go again. That was a break lower. So this is one thing with TradingView, which a lot of people won't understand. Just going to zoom in. This might be a bullish candle on TradingView because the color is different, but it's actually a bearish candle. Okay. Reason for that is we didn't create a new high, but we did create a new low. Okay. We got the close in a bullish position, but the overall candle was still bearish. So chances are the next move is going to be bearish. Okay, and that's what happened. Actually, we got an outside bar, and it was bullish in the end on the close, but we still pressed down lower. Okay, so just something to be aware of. So anyway, prices come down to here, or our lines come down to there. We now are in the pullback. Couple of inside bars. Stuck within this range. And we got BOS again. Alright, so a lot of people will be saying, oh, that looks like it's going to reverse, it's going to reverse. No, use market structure correctly, okay? Use BOS and CHoCH, the highs and lows, the breaks of structure, and so on and so forth. The breaks will happen 2/3 to 3/4 of the time, okay? Breaks of structure in the same direction. That is why we try to trade in the same direction as the trend. And all what we're doing is we're just identifying areas on these legs, on the most recent leg, which are going to be likely reversal points for the market to continue in the direction which it's going. Okay, not going to bore you too much with going through any more. You can go through yourself. I recommend doing so. Next video is literally data gathering, doing this. I've done it with practically the whole year on H4. Put it all into a spreadsheet to prove that this is mathematically unbeatable. Okay, so, and when I say unbeatable, I'm not saying that there's not going to be better trading strategies out there, but you cannot lose if you do this, okay? So hopefully that was helpful. Any questions, stick them into the comments box and check in soon, all right?